of the time. Martha and Corazon, please feel free, the floor is yours, and Milka will stay through the session to support you with whatever that you may need. I may at some point to other engagements. Thank you, and
Thank you so much, Irene. So good morning, ladies and gentlemen. So, hello, can you hear me? Okay, so good morning once again, ladies and gentlemen. So my name is Corazon.
But even the comments, a number of people are saying they can't hear you and you're breaking.
Can they hear me now? Oh, I'm being told I'm clear. Okay. I think I'm clear. So good morning, ladies and gentlemen. So my name is Corazon Aquino. I'm from Marketing and Communication Department, Tax Education. So my job is just to sort of break down the very complex taxes so that we'll be able to understand. So today we'll just be going through a few areas that we feel are important for HR practitioners to know in regards to the Finance Act 2022. So I'll encourage us to just ask questions. So this will be the scope of my presentation today. So I'll just do a brief introduction. Can you see my screen? Sorry for that. I hope you can see my screen. So
yes,
like I said, sorry. Okay, thank you. Thank you for confirming that. So the scope of my presentation will be around what are the changes that have been made in regards to the Income Tax Act, what changes have been made in regards to the Value Added Tax Act, the Excise Duty Act, our Tax Procedure Act, and Miscellaneous Fees and Levies Act of 2016, and other acts. So that will just be a scope. I've picked a few areas from the different acts that we feel will be able to just get to know and understand. So maybe we could be wondering, why do we feel that this is important? We believe that the HR practitioners are our mouthpiece. So that information that we will wish to get to employees, we are hoping that from today's session, we'll be able to just pass the same. So the Finance Bill 2022 was submitted to the National Assembly on 7th of April of this year. And the President assented into law on 21st of June 2022. So you will notice as I'll be going through the presentation, we have two different effective dates. That is the dates when the different laws are coming into effect. One will be 1st of July of 2022, and the other effective date that we'll be having is 1st of January 2023. So I'll just be specific on which specific laws will take effect in those 2 dates. So one thing that we felt is important for HR practitioners to learn is the Act has introduced withholding tax of 15% on financial derivatives. An example of a financial derivative could be stocks, currencies exchange, where there's a contract between two parties and you expect to have some gain from it. So in the spirit of trying to expand the tax base so that at least we'll be able to fund our recurring expenses as a country, we've introduced 15% on 15% withholding tax on this particular gain. And the effect of this will come into effect on 1st of January 2023. So anyone trading within between now and in 2022, they might not be affected. So you're just giving the taxpayers enough time to be able to just get used to the new law. Initially, if you looked at the Act, the Income Tax Act, we did not have a definition of a permanent home. And we are guided by law, so we need to be able to have a guidance by law, just so that we'll be able to know what are the parameters when it comes to taxing. I'm sure all of us can appreciate that currently the trend is working from home. So we'll have someone, maybe their home might as well be outside Kenya. Maybe there's someone who is non-Kenyan, but they've decided to have their permanent home in Kenya. So for the purposes of taxation, the Act sought to sort of just define it in a better way, so that it would be able to just get to understand how do we arrive at this. And the definition has been just so that it's a bit clear, where do you reside? That is what will be used to form part of what is your permanent home. And if it's where do you get your economic, economic gains? If you're close to it, where is it closest? Those are now the parameters that we'll use to define what a permanent home is, in line with the current trends that we are having. So since you're dealing with HR practitioners from across, I know there's you try as much as possible to retain your employees. So one of the incentives that employees are usually given is you're given an option to get a share, to just get a share of the company that you're working for. So with that, the change that we've made is that we've changed the tax point. The tax point is at what point will we tax the gain to the employee. So if an employee has gotten into a share option plan, initially the tax point will be the time of vesting, but currently now we've amended it to be the time of exercising that option, so that at least we'll be able to just assist and encourage employees to be able to just maintain where they are, and sort of support the HR practitioners in maintaining the employees. So another thing that we noted was on the digital service tax. You'll find that where we are at right now, we have a lot of businesses that may have stations in Kenya and outside Kenyans. And since we want to encourage investors to just come in and be able to get more employees on board, we've adjusted the regulations on digital service tax, so that if a non-resident has a permanent establishment in Kenya, we'd say, for example, if you look at Google, I've seen Google has entered the market, and they're having permanent offices here. So that we just encourage them, since they have a permanent establishment in Kenya as Google, they will not be requested to pay for DST. It might as well be even an individual, so they do not pay for DST in that particular order. So that is one of the changes that has been made, and that the effective date was 1st of July 2022. So that one has already taken effect. In the spirit of humanity, initially you'll find that if you made any deductions to a charitable organization, we were not taking, because deduction can take any form. It can be in kind, or it can be in cash. So for the purposes of accountability, what used to be allowed was just the cash bit of it. But we've since the Finance Act has since changed that, so that it allows deduction for all sorts of donations. So if you make any donation to any tax-exempt charitable organization, then you'll be allowed to cater for that. That is just in the spirit of us encouraging humanity, especially in these times that we are all in. Initially last year, what happened, we were told that you could carry forward losses for just a period of 10 years. And then after that, you could no longer carry losses. But last year, we realized during the COVID pandemic, so many things changed. Some organization did not trade at all. So in the spirit of just sort of building them and be able to just assist them so that they can continue their businesses, the 10-year period was lifted. So you can carry your losses forward for as long as you still incur those losses. So, and that took effect in 1st of January, 2022. So the other provision that we had was exemptions from interest restrictions. There were some restrictions that we had for some different institutions, but what you're taking note is times are changing, and people need to be able to fund their business capital to just start off their business. So with that taken into consideration, because we're just looking at how many people can we get on board so that they can be employed. So microfinance institutions that offer this capital for startups have been exempted from the interest restrictions, meaning right now, at least, they'll be able to claim those interests that they pay. Any entities that are licensed under the Hire Purchase Act, these ones have also been able to be brought on board from the exemption. Remember, we're looking at the individual because HR is it comes down to the person, to me as an individual. So if I make an individual comfortable, then it means they'll be able to be more productive and give back more. So that is one of the reasons why some of these restrictions and exemptions have been taken into consideration. So non-deposit taking institutions involved in lending and leasing business, companies undertaking the manufacture of human vaccines. We've just seen, I think everyone can appreciate that currently where we are at, human vaccine has just become very important for us. So you can imagine if we did not have this exemption and people have to pay for maybe COVID vaccine right now, your staff are not vaccinated. So in the interest of just taking care of the human resource, this has been taken into consideration as well. Companies engaged in manufacturing whose cumulative investments is in the preceding 5 years from the commencement of this provision is at least 5 billion shillings. You see, the thing is, we're just trying to see how do we cater for the human resource? How do we get them to have a space where they can be employed, a place where they can at least have something and a source of income of some sort? And that is why you'll see the next bullet where you are engaged in manufacturing in places outside Nairobi and Mombasa. You see, Nairobi and Mombasa are fairly developed. So we are trying to be able to just spread out this, encourage people to be able to set up investments outside Nairobi and Mombasa so that we can cater for every Kenyans from where they are. So the other thing that we've mentioned, like I said earlier, you've noticed that the world where we are right now, it's very global. So you'll find that multinational enterprises is norm. You'll find Coca-Cola is here, Coca-Cola is everywhere. So for that, we've just made provisions. There's a requirement for members of multinational enterprise group to file country by country reports. It's just sort of that. It's for information, mostly for information purposes, so that we just know, so that we understand, so that we know how are people treated in different countries, why. So it's just for information purposes, so that we can see how we can improve the livelihood of our own. And with that, they're also asked to file of country by country report, master file and local file by the ultimate parent entity or constituency entity of a multinational enterprise group. these two we decided to put them there just so that you can understand and appreciate that for the purposes of us making decisions that are favorable to our own human resource, we need to be able to understand how multinational enterprise work. And these three areas are already in effect because their effective date was 1st of July of this year. So another provision that we have is introduction of taxation under special operating framework arrangements for companies. You'll meet that in the process of us trying to encourage investments, there are certain conditions that we'll give, and you'll be given a specific tax rate. So, we've introduced taxation. I'll mention some as I go, just a few of the companies that are enjoying this and what rate they're enjoying. And that took effect on 1st of July, 2022. So when we came up with the Income Tax Act, it was way back in 1974. So many things, you can imagine so many things have changed. How we used to think then and how we used to think now is a whole lot different. So when it came to insurance relief, you'll find that the insurance relief was, the way the act was being enjoyed by the male. So the act has changed, sort of just clean it up so that the insurance relief that each and every single person is entitled to should be enjoyed by both genders. Meaning in an event that you have a female employee, the female employee is fully entitled to claim an insurance relief under their salaries. The male employee is also allowed to enjoy the same. This is just basically for the purposes of fairness. And that took effect 1st of July of 2022. We felt it was important for us to just mention capital gain tax because we know that you will have employees who wish to transfer their asset, whichever asset that will be. Could be they're transferring shares, whatever it is that they want to maybe land. So for that particular case, we just felt it was important for them to know that moving forward, we've increased the capital gain tax rate from 5% to 15%. That is the current rate that we've introduced. Remember, capital gain tax was final. So for the purposes of just trying to sort of bridge the gap and be fair, we've increased it up to 15%. There's a transition provision extension for an extra 1 year on construction of bulk storage and handling facilities for supporting the SGR operations. So it was supposed to end, but we decided to just extend it a bit so that at least we'll be able to support these facilities that are encouraging the SGR operations that we can all agree is of benefit to each and every single Kenyan who uses that particular route. So that came again into effect on 1st of July, 2022. For the CGT, that is capital gains tax, I forget, the effective date will be 1st of January, 2023. So if you have to make if you make any transactions and transfers between now and 31st of December, the 5% rate will still apply. So we've also included, and this is something again, just in relations to what you're seeing, the monkeypox, the COVID. So the government felt that it was important to, again, just cater for the health. Health is very key for the human resource. So we've further exempted some more income from taxation, and this is effective 1st of July 2022. And especially in respect to a company and undertaking the manufacture of human vaccine. So we're just trying to promote the companies that are manufacturing human vaccine, especially in Kenya. And what we've exempted from them is any deemed interest in respect to an interest of free loan advance to them, payments to non-resident service provided without a permanent establishment in Kenya for services provided to a company undertaking the manufacture of human vaccine. You'll find maybe you'll say, for the sake of supporting our business, we'll extend an interest-free loan, so that one will be exempt from tax. If maybe you need an expert to just come in and show us, this is how we go about it, this is what you need, this is what you require, that so that we'll be able to just set up this manufacturing companies, that one is also exempt. Compensating tax accruing to the company, and then dividends paid by the company to any non-resident person, and income of the company. Remember, all this, like I said, is just so that we can encourage our own to be able to set up businesses that will be able to just come up with vaccines that will ensure the health and safety of the human resource, so to speak. So dividends paid by the special operating zone enterprise developers and operators, and dividends paid by the enterprise developers and operators to any non-resident person as well. All these are exempt. In short, what you're just trying to say is companies manufacturing human vaccines have just been empowered and supported, so that they'll be able to support this at the end of the day. So again, still under income tax, we was amended to allow for transformation and distribution of electricity off-grid to qualify as manufacturer, and therefore claim 100% investment allowance. When you're doing business, or when you're trying to manufacture or produce or just cater for your employees, one key thing is to reduce the costs. Reduce the cost of production. If you reduce the cost of production, maybe you'll have some extra cash that you can give to your employees as incentives to bonus, or just sort of an increment. So what the Act does is sort of just look for ways that you can give incentives to different companies, so that at least you'll be able to have some capital to probably reinvest, hire extra. And this is a classic example of one. If electricity is reduced to a manufacturer, that is a key raw material, you can imagine the ripple effects that you'll have to the company. Again, we still have investment allowance at 150%. And again, just so that we might note, this is any investments being done outside Nairobi and Mombasa. You can imagine if I have an investment somewhere next to my home, these issues of someone is being transferred away from home, or I can only get this job in Nairobi, will reduce, and then the employee will be able to work and enjoy and give their best and be more productive. So a company operating a carbon market exchange or emission trading system that is certified by the Nairobi International Financial Center Authority, they get a special rate. Normal companies are charged at 30%, but these ones are charged 15% for the first 10 years from the year of commencement of its operations. Of course, this is directly related to the fact that what they do is greatly having a positive impact in our environment, and by extension to the human resource as a whole. All these are coming into effect on 1st of July. So if we have a company operating a shipping business in Kenya, like I mentioned earlier, these are just some of the preferential rates that I mentioned, companies that have special rates. So any shipping business in Kenya, the corporate tax rate is 15% for the first 10 years of the year of commencement of its operations. So you can imagine what this will have to us. We'll have more investors, and then if we have more shipping businesses coming into Kenya, that means we'll be able to hire more, and then we'll be able just to sort of play a role in reducing the rate of unemployment in Kenya. So interest and deemed interest arising from a bearer bond issued outside Kenya or of at least 2 years duration will attract a withholding tax rate of 7.5% of the gross lump sum payable. Remember, this is, we're just sort of trying to encourage you, invest home, don't invest outside. So under VAT, the one thing that I think we can all agree is the cost of living had gone high, and people sort of resorted to using charcoal, which is not very good for our environment. So for the sake of now catering for the human resource as a whole, every Kenyan, what the VAT Act 2013, the Finance Act 2022 has made amendments to, is the rate of LPG. So you'll find that if you go to buy gas today, the rate has slightly reduced. It's not as high as it was. It's reduced from the 16% rate to 8%. And this is just for the sake of cushioning us and sort of reducing the cost of living and sort of reducing the stress when it comes to us being able to manage our homes. So another thing that we have was that has changed is we've excluded a person to whom an imported service is supplied from reverse VAT. Reverse VAT is when we require you, when I order a service, I get a service, and probably the service is meant to sort of improve the capacity of my employees. If you order this service, you are still required to account for the VAT, but with now that has been excluded, just so that you can encourage the exchange of ideas, benchmarking, so that we get to learn and build capacity. So there's a clarity that input VAT can only be deducted in a return for a period. Initially, that was not very clear. It was what was happening. You had to file a return for you to be able to claim your input VAT. But now it is very clear. Without claiming it when you're filing your VAT return, then you cannot claim that input VAT that has been deducted. So we've amended and just said to refund excess input tax for manufacturers supplying official aid-funded projects. You'll realize that especially when it comes to manufacturing, we're really, the government is really keen on building us as Kenya. It's part of the Big Four agenda, just being able to build our own, make sure that at least our own will be able to understand and take ourselves to the next level. So we had penalties and interest that are applicable on VAT on imported goods. So what we've done, we've aligned so that it's easier for the companies to be able to account for this interest. We've aligned everything, interest and penalties, with the Tax Procedure Act. So the rates on the Tax Procedure Act are the rates that will apply even on the VAT Act. And then we've deleted provision of refunds of tax paid in error, and so that we can provide for the same under the Tax Procedure Act. So if you paid tax in error when filing your VAT return, when filing your income tax return in any other return, the treatment will be the same because we are following the procedures under the Tax Procedure Act. So another thing that we've changed, there used to be a confusion. You'd find that if I'm paying digital service tax, I'm an non-resident. I stay outside Kenya. I'm a non-resident. So, and I pay digital service DST. And this DST, I'm supposed to account for VAT on it. what we've done for this particular persons, the VAT registration threshold of 5 million will not apply to this person. So either way, they still need to apply to pay for the VAT that is required. And this is all so that we can cushion our own. Let us get as much as we can get from traders who are trading from outside, and then our own could be able to just reap the benefit at the end of the day. So under exempt goods, there's some changes under the Finance Act. So taxable goods for the direct and inclusive use in the construction and equipping of specialized hospital, subject to the provision introduced, are not exempt anymore. So those ones have been lifted and they are no longer exempt. But in addition, we've added some. So there is bioethanol vapor stoves. I don't know if any of us has come across, is it Koki or Kiko? It's really trending. So that one has been exempt, so that at least we'll be able to cater for those who may not be able to afford the LPG. We've included pellets in exemption of sustainable fuel briquettes for household and commercial use. Briquettes are sort of like the normal maca charcoal that we use, but this one are more friendlier to the environment. So those ones have also been added to the exempt schedule, just so that we'll be able to encourage and cater for those who may not necessarily be able to afford electricity and LPG as options of cooking. Plant and machinery of Chapter 8 and 84 and 85 used by pharmaceutical manufacturers. These ones are also exempt. Again, this is all in line of taking care of the health of our human resource. Medical oxygen supplied to registered hospital, urine bags, among other specified health items, inputs and raw materials used in manufacture of passenger motor vehicles. You can imagine how many of, if you can just think about it, how many of your staff actually use public means to come to work, so that at least to make it easier for them to come and slightly cheaper. That is what we're encouraging. And then locally manufactured passenger motor vehicles and such capital goods and exemptions of which the CS may determine to promote investments in the manufacturing sector, provided the value of such investment is not less than shillings 2 billion. So you can see how the government has been very considerate in just trying to be able to sort of create extra sources of income so that we'll be able to just cater and employ our own. So exempt goods and services. So any taxable goods, inputs and raw materials imported or locally purchased by a company which is one, engaged in business under a special operating framework arrangement with the government. And two, incorporated for the purposes of undertaking the manufacture of human vaccines, whose capital investment is at least shillings 10 billion. So you see, even they've even gone an extra mile just to cater for the raw materials that are required. And in the long run, we may not see it now, but in the long run, this will mean that the human resource will be able to afford to buy some of the basic needs that they require. So we've done the zero rating of the exportation of taxable service in respect to business process outsourcing, fertilizers, input of raw materials locally purchased or imported by manufacture of fertilizers as approved from time to time by the CS of Agriculture. Maybe you might ask yourself, is there a difference between exempt and zero rating? Actually, there's a big difference, because when it comes to zero rating, it means that you actually get to claim any input VAT that was charged. So this will mean that fertilizers will be a whole lot cheaper. And if fertilizers are cheap, what does it mean? We'll be able to afford food that is key for us for the human resource Local inputs of raw materials that are locally purchased will mean they say that life is like a circle. If I take care of maybe someone back at home, they're taken care of, they will reduce the pressure on your employee. So we're just looking at what areas are we looking at the bigger picture that will cause less strain to the common mwananchi. So the deletion of zero rating of protective apparel, clothing, accessories, and equipments, as they were already exempted. So there's excise duty. Excise duty is it's not a very common. It's common, but not common to us. So every once in a while, the commissioner can adjust the excise duty subject to the inflation rates. But what the Finance Act has done, it has given the commissioner leeway to exempt certain products from inflation adjustment. So in as much as inflation goes and reaches up to wherever it will reach, because the world is unpredictable, what the commissioner has been given a leeway to do is certain products that the commissioner feels are very important, very, very important for the local and for the Mwananchi. They're given a leeway to exempt them so that we do not add the inflation adjustment. This at least will be able to give some level of certainty, and with certainty, then it brings peace and less stress to the community. So so there's deletion of the related party provisions in determination of ex-factory sales price. And then the application of penalty and interest of interest relating to imported exercisable goods. You'll notice every once in a while, you need to import one thing or the other. If it's exercisable, and it's something that you can't generate from here, it means that it will have a ripple effect to me as an individual. Maybe it's even something that you need to use in your organization. So what this has done is it has been capped. It has been capped and aligned with the Tax Procedure Act. So any interest and any penalties and interest will not exceed the principal tax amount. So so alignment of imported and saturated polyester, alkyd, emulsion VAM, acrylic, homopalmers, all these will be aligned to the correct HS codes. These are things that you may not necessarily know, but you use them on your day-to-day life. So we've deleted some of the following from imposition of excise duty, that is electronic cigarettes. So the cartridge that you use for electronic cigarettes, and imported furniture of any kind used in offices, kitchen, bedroom, and any other furniture, so that it just makes it easy for you to be able to afford to get a comfortable office furniture for your staff. Excise duty on betting, it's at 7.5, but it shall not apply to horse racing. Of course, we still have to put excise duty on betting so that we may be able to deter our own from engaging in betting. So there are some exemptions from the excise duty. So neutral spirit imported or purchased locally by a registered pharmaceutical manufacturer upon approval by the commissioner. Again, these are things that we feel we still require. We're still required to use sanitizers, and neutral spirit is still a key thing when it comes to it. Locally manufactured passenger motor vehicles. This one has also been indicated. Again, this is just so that we may be able to promote investments in Kenya. So Under the first schedule of the excise duty, we have the following changes. One, we've increased the rates of excise duty for fruit juices, beer, wine, spirits. I will repeat, for beer, especially for beer, wine, and spirits. And this, of course, we look at it and ask ourselves, what is the ripple effect when employees engage in drinking? So that we just sort of deter, not stop, that we may not be able to. We've just increased the rates so that at least the employees will be able to come in sober, or just have a limit to how much they drink. So cosmetics, beauty products, and jewelry have also we've also increased the excise duty on it. Of course, because when you're looking at what you're increasing and decreasing, we're looking at how important is this to all employees. So these are things that we can afford to live without. So for that reason, that one was increased. Cigarettes, other manufactured tobacco, and manufactured tobacco substitutes. Cigarettes are harmful to us. So for that reason, again, just to deter the consumption, we've increased the rate. Imported sugar, confectionery, and imported white chocolate has also had an increase on it because of the ripple effect that they have to the health of our own. So the following items have their base have been amended, and the new items will be charged excise. So the electronic cigarettes and other nicotine delivery devices, the devices now will have the delivery devices are what will now be charged excise on. And then there is liquid nicotine for electronic cigarettes, imported ready-to-use SIM cards, fees charged by digital lenders, and importation of cellular phones. All these things moving forward have had an introduction of excise to them. Again, when it comes to SIM cards, we have our own companies. We're just trying to be able to promote our own. Fees charged by digital lenders, this one also will be charged excise duty because we can all agree that that is the next, it's becoming very popular. Digital lending is becoming very popular. So we might as well, for the purposes of fairness, just tax them so that we can widen the tax net. So under the Tax Procedure Act, there are just minor changes. So there is you need to notify the commissioner on any change of particulars in a trust. So where there is a trust where someone leaves a will and the children are put under a trust to manage maybe their assets, if for whichever reason there are any changes, that needs to be made to the commissioner. And the commissioner might not necessarily mean the commissioner who's in Times Towers. You just need to go to any, to the nearest KRA office, and you'll be able to just be guided on how you can give that information. We've talked about the amendment of return to claim input VAT that is limited to 6 months. Security of unpaid taxes, that this expands to the scope of such restrictions to include aircraft, ships, motor vehicles, and any other property, so that at least we may be able to secure the unpaid tax. So there is something called power to collect tax from a person owing money to a taxpayer. So we've increased the notice period for notification to the commissioner by an agent from 7 days to 14 days. Initially, we'll just give you 7 days notice and tell you you'll be able to collect, you owe this person this much, that this person has not paid taxes. So we'll come and collect. But now we've increased it to 14 days, at least to give the agent enough time to be able to just align and communicate to that particular taxpayers so that we can build relationships. So the notice shall be issued only when the commissioner has confirmed assessment through an objection decision and the taxpayers has defaulted to appeal to the tax tribunals within the prescribed timelines. So this is sort of like when all else has failed, that is when we'll use the notice and the notification and use the agent to collect the tax. So we've excluded the registered manufacturers with a value or investment of shilling 3 billion in preceding 3 years from withholding VAT. Again, this is just so that you can support the Agenda 4 and be able to bring in as many investors as possible and create employment. We've provided provision of an additional options around refunds due to overpayment. So there are several options that you can have when it comes to refunds and overpayments of taxes. So we've provided a mechanism for refund where tax has been paid in error. We said we've aligned for all, be it you paid it in error in VAT, in income tax. At least we've provided a mechanism where we'll allow you to be refunded that amount that was paid in error. And then we've also created a mechanism for refund of taxes which were paid on exempted or zero-rated supplies. So if you paid taxes on an item that was exempted, because I've just mentioned a few exempted, key exempted items, maybe you did not know and you already paid taxes on it. There's a mechanism for you to be able to claim refunds for that particular amount. The issuance of objection decisions. So like we said, the commissioner will be required to notify a taxpayer if their objection is invalid and logged within 14 days. The commissioner is also to issue an objection decision within 60 days from the day of receiving a valid objection via taxpayers. So the timelines are there so that at least as a taxpayer, I'll be able to know between this day and this day, I need to be able to close on this. Initially, it was not mandatory for trusts to have PIN numbers, but moving forward, all trusts will be required to have a PIN number. So under Miscellaneous Fees and Levies Act, there's clarity that the lower IDF and RDL shall be charged on raw materials. This is especially when it comes to customs and intermediary products imported by manufacturers. Exclusion of currency notes and coins imported by CBK from the additional duty of 2.5% of the customs value of goods entered for home use from an EPZE. So all these things are just being put in place to support, again, all the way down to the local 190. So we've introduced an export levy of US dollars 175 per ton on iron ores and concentrates, including roasted iron pyrites. Export levy annual adjustments. We've also exempted from payment of import declaration fee and railway development levy on inputs and raw materials imported by manufacture of pharmaceutical products. 2, goods imported for use in the construction and maintenance of human vaccine. And then goods, inputs, and raw materials imported by a company which is engaged under SOFA with the government. We just mentioned why we have this particular, and you can see if it's affecting one act, you can see it's affecting all other acts all through, just so that we can have a seamless way of supporting and implementing the same. So other acts, there's the Stamp Duty Act, which exempt from Stamp Duty Act as an instrument executed in favor of mortgage refinancing company. Statutory Instrument Acts of 2013, we've extended the exclusion of tax-related statutory instruments from the automatic expiry of 10 years from the date of their republication. Under Evidence Act, Cap 80, privilege related to sources of information to make references to laws specified in the first schedule of the KRA Act. And then we've aligned initially what was there was the different acts, but we've just made aligned them so that someone will know that you're talking about all the acts. And then we've realigned the definition of who a revenue officer is. And then under Betting, Lotteries and Gaming Act of Cap 131, we've exempt horse racing from betting tax. So in a nutshell, those are some of the changes that are being made, just sort of an highlight, just so that you see how it affects us as individuals and by extension, your human resource. So with that, I will ask if there's any questions. And
thank you so much, Corazon. This is Milko Wow. Irene stepped her out.
okay.
She's attending another meeting. Thank you so much for an enlightening presentation on Finance Act 2022. We appreciate having this mysterious area clarified to HR professionals. And to HR, the increase in beers, tobacco, chocolate, myself have been affected in chocolate parts. I love chocolates. I think you should do something. Rosel, can you do something on chocolates? It's my favorite. So I can see we have several questions and comments from members. I'm trying to access them. Yes, here we are. Yes, we have several questions and comments from members. And one of them actually, even before I read, is asking the refund, does it really exist?
Yes, it does.
You can start with that. Does it really exist? Yes, please start with that one.
So what happens with the refund is it's like being in a love triangle. I think that is the best way I can explain. So you pay the money to KRA. That is the face that you see. But the tax that you pay goes directly to Treasury for Treasury to account for it. So what normally happens when we get a refund, when you apply for a refund and KRA ascertains that you're supposed to pay the refund, we will push the same to Treasury so that Treasury can refund the money. So it's usually like a whole love triangle, like I mentioned. But the good thing is it's a love triangle that is working. At least all parties involved are agreeing. The only downfall is that since it's from one organization to a different organization, it might take time just so that to iron out, but you will always get your refund. And that is why you'll see, we will always ask you when you're filing your return to give us your account details. That is the whole essence of why we usually ask for that particular option. So the account details will give you an option for now when Treasury has ascertained and we're supposed to give you back your refund, it will just be wired direct to that particular account that you gave. So refund comes, it's just that it takes slightly longer than we would wish.
Some people fear providing their account details because maybe that's where KRA try to find out how. So I know some people who do not provide their KRA, their bank account because of that, because maybe KRA has other agendas apart from refund. So we have other questions. Yeah, that's happened. So Georgina Kilonzo is asking, kindly expound further on investment allowance.
So on investment allowance, this is just an incentive that we give to investors, and what we do is you can see, like when I was talking, I'd say anywhere outside, if you invest anywhere outside Nairobi or Mombasa, you'll be given 150% investment allowance of what you've invested. The whole idea is we want to encourage you. We want to encourage investors as much as possible to spread investments far and wide in Kenya. First of all, to come and invest in Kenya. And second of all, to spread the investment. You'll imagine if today I was to set up a camp somewhere in Samburu, a huge company in Samburu. Slowly by slowly, you will find more investment coming up. So that is just the essence of the investment allowance. I think as we go, we'll be able to have a session where we'll be able to just sort of focus on investment allowance that is affecting different, because it's different with different sectors. And that's so that we'll be able to just further expand on it. But in a nutshell, Georgina, I hope that answers your question. That is what investment allowance is all about. Milka, is there any other question, or I can?
We have several questions. You're able to read from your side?
Yes, I'm able to read from my side.
Okay.
So, so there's a question from Nelly.
Yes, yes.
So there's a question from Nelly Indimuli where she said, I did not get clearly the tax on multinationals. Does it mean that we declare tax for parent companies? No, it's just a report. And the report, there are parameters that are there on how you'll make that report. We do not need them to declare and file a return. That is not the case. It is a report that has been agreed upon, and we'll be able to share with the two. This is just so that you can have an understanding. It's for information purposes only, period. When they file a return, then it will mean we'll expect them to pay taxes. That is not the case. It's just for us to be able to understand best practices and just get to know how the multinationals work. And so there's another question from an anonymous attendee. Do we know that the certain products being so there's a question. Do we know what the certain products being exempt from the inflation adjustment will be? No. For now, we do not know what they will be, but the commissioner has been given a leeway to be able to ascertain what this will be. And you can be rest assured it will be guided from research and what is happening around. It might be something as, it can be anything. It can be anything that will feel at that particular point directly affects the common mwananchi. So this one will vary from time to time. So we do not know as at now. But if it's any consolation, you can be rest assured we'll be able to share information on what will be exempted from the inflation adjustment. So the other question is, in hospitality, where employees provide meals to the employee, there's a taxable amount charged to staff meals of shillings, 4,000 per month. What is the revised taxable amount? Thanks. This has still remained. We haven't revised that yet. So that has still remained. We did not have any particular changes when it came to pay as you earn. So there is no revised taxable amount. So is there tax exemption on home ownership savings plan? In the Finance Act 2021, the Finance Act 2021 removed this exemption on home ownership saving plan. So this is no longer there, but you will realize this was sort of replaced with the housing levy. And because now there is housing levy, and housing levy is meant to just encourage people to buy the affordable homes. So this one does no longer applies, and it came into effect as 1st of January of last year. So so please share the slides. We will share the slides. We promise to share the slides. So if excise tax affected, is excise tax affected after or before VAT, and when and how is it submitted? So Samuel wants to know. So it is after VAT, and it's usually submitted by companies that are specifically dealing with exercisable products. So what we have an excise tax return, And the excise tax return, you'll realize that excise has very many different rates. Like you mentioned, there is chocolate, there is nicotine. So depending on what the company is dealing with, what exercisable product the company is dealing with, the return gives you an option to be able to just pick it up and calculate the same. So, in HR consultancy services, especially labor outsourcing services, do you tax the total gross salaries, or you tax the management fee, having in mind that the staff will pay? When it comes to consultancy, this is usually a huge bond of contention. Maybe the one thing that we'll ask is, what sort of contract do you have between the two? I'll give an example. You'll find, for example, a hospital. You are a HR in a hospital, and you maybe you're outsourcing a doctor who's a specialist in a particular area. If we look at the nature of contract, and we'll find that there's consistency in how many times you will hire this person. Maybe it's a pediatrician, and the pediatrician will be coming every Tuesdays. Every Tuesdays is the day when we have this pediatrician. You see, there's a slight shift. Then the question you ask yourself, is this person an employee, or is this person a consultant? And then there's a different scenario altogether, where you have a case that you've never had before. It's a new case. So you need to have a consultant coming in maybe once to just sort of handle the case, and that's it. So it always comes down to whether it's a consultancy or whether it's whether it's an employee. If we determine that there is consistency, and you keep on having these specialists coming, we strongly advise just charge them pay as you earn, because they fall under the category of a pay. But if it's one-off consultancy, just giving advice in an area, then the withholding is what will apply. So where one has applied for dormancy for the company, and KRA has not responded to the request, is one still mandated to file the monthly nil returns, or the written request to KRA is sufficient? What I'd advise is, as long as you have not received any communication from KRA, please continue to file your nil returns to avoid penalties and interest. But then I'll encourage you, if it has taken too long, just visit any of our offices. And I know when you applied for dormancy, you were given a task number. Just give the task number so that they can follow up and quickly just sort out the issue. So I hope that, so those ones were on Q&A. Let me see if I can see the messages on the chat. So I'm just going through the chat to see if there's any questions that I haven't answered.
All right.
The questions are many, and just bear with me as I try to, they're in between other comments. So let me see.
Yes, there are several questions on the chat side. So
yeah.
we request if you can, if members can post the question on Q&A for easier track, because we are not able to trace them under the chat. There's one from me, Karazen.
Yes.
Yeah, this is from Milka. In a move to protect consumers from increase in prices due to annual inflation adjustments on excise duty of specified products, the Act has amended the annual inflation adjustment provision to empower the Commissioner General to exempt specified products from inflation. Why not UNGA? Why not UNGA?
Actually, you'll realize that UNGA is not even charged excise on it at all. UNGA as well is not even, it's exempt from VAT. Recently,
Okay.
I don't know if currently for UNGA to be at 100 bob currently, you'll realize that if anyone had what the speech, the IDF and the RDL had to be brought down, had to be reduced for us to be able to afford to bring down that UNGA. So for now, UNGA is one of those basic things that we do not charge any we do not charge any VAT on it. We do not charge any excise on it because it's basic. To sort of just support again the local Mwananchi, you'll see, you remember I mentioned something about electricity. We go further and ask ourselves, what is that? Because we have zero control of currently we have zero control of the petroleum and diesel. We can't. Prices are high all over the country. So what the government asks themselves is, what is it that I can adjust to sort of try and cushion? And that is why you'll see something like electricity coming in, just so that we'll be able to balance off those amounts. I hope that sort of answers the question.
Okay, thank you. Thank you.
But
So,
UNGA is never charged. UNGA is usually, it's one of the, actually, UNGA is exempt from so many things because it's a very basic commodity to us as Kenyans. Yeah. And so I can go back to, I think I've seen a few more from the Q&A. I can just answer them. So there's a question, is it mandatory to file? Is it mandatory to file wife income tax, or both feel separate since you don't have more details? It is not mandatory to file for your wife. The wife can file their own individual return. They are allowed. Why we've put in the option for filing for your wife, it's just to make it easier. You can file one return, but it's not mandatory. So please just be encouraged that anyone can file their own individual return. We are in the 21st century. The laws have changed. So if PWD has been exempted from tax, does one file returns? Yes, you have to file your return. Remember, a return it's sort of a statement, a truth statement and a position of where you are. One, we need to know and ascertain for sure that you got the exemption that is you're supposed to get. And two, I can be a PWD, an employee, but I'm owning a mansion somewhere. Remember, the rate is capped at 150K per month. So for the purposes of fairness, we need to be able to see a holistic you in that particular return. I know these are some of the issues that you're going to do. We'll have a session on pay as you earn, and we'll be able to just dwell and break it down so that we'll be able to understand the same. So please let everyone, as long as you have a PIN number, it is mandatory for you to file a tax return. The system will give you an option to indicate your exemption certificate, so we will not expect you to pay any taxes if you're below the tax bracket. So there's a question on insurance leave, on it being done by both genders. Yes, both genders could claim for it. We did not give any restrictions at KRA. And that is why we'll not go back and tell you you are not supposed to claim the insurance relief that you claimed since 2014. We just wanted to iron it out so that there is no gray area in the law. So we are happy that at least the ladies were still able to take advantage of the benefit and enjoy the same. So so if you're outsourcing employees, okay. So if I'm a HR firm that are outsourcing employee, the firm charges a fee and the salary of the employee. So the employee, if KRA taxes the total, it's double taxation on the staff. Why not just tax the fee. I'm not so sure what you mean by the fee. I don't know what fee you mean when you say when you're outsourcing a salary and a staff, but when it comes to taxation and when it comes down to us taxing you, we look at all benefits that you've been given. And we lump up all those benefits and then we subject it to taxation. So there is no double taxation at all. It's just sort of us trying to be fair and asking ourselves, how much is it that you really gained at the end of the day? So there is a question on how gratuity, how do we tax gratuity? And I'm going to just request, because gratuity is a whole lesson, if I'll take this one down and make sure that when we'll be planning our next session, we'll definitely include how to tax gratuity so that at least we'll be able to understand. So we'll, on our next session, we'll be able to take you through gratuity as a lesson so that you'll be able to understand that as well. So can you touch on tax exemption for the disabled instead of having to wait to be employed, or rather than have own businesses? Can't KRA allow one to just get the exemption certificate for the purposes of filing returns? When it comes to exemptions, it's not just KRA who are giving you the exemption. It's a whole circle of people giving you exemption. So the question that probably will like to ask, you are exempted for taxation. So you can be allowed if the National Council of Persons with Disability will give you, will allow to give you the exemption certificate. KRA, we cannot stop you. Because ours, you'll realize for KRA, the only thing that you need to have as KRA is a tax compliance certificate. That is the only requirement that you need from us. So I'll encourage you, or anyone who wants to apply for an exemption, tax exemption for persons with disabilities, please feel free to do so. KRA, we will freely give you the exemption certificate, the compliance certificate that you require from us. Actually, it's automated. You just have to apply for it, and then you can proceed with the rest of the institutions that are key players as well in offering the exemption certificate. So I hope that answers that question. So so we are asking, where can we see the definition of a consultant versus a full-time employer as per KRA guidelines? We have it on our Income Tax Act. So it's usually the first pages, we'll see the definition. So the definition is very clear. This is something I'll also bring in when we'll be going through the Income Tax Act in particular, so that you'll be able to appreciate the definition between who is a consultant and who is a full-time employee. So please clarify what you said about the difference between exemption and zero rating. So when I say that something is exempt, it means, especially when it comes to VAT, exempt means I can buy something from the shop that has VAT, but maybe when I've sort of manufactured it and repurposed it and sell it to someone, I will not charge any VAT. That is exempt. But when it comes to zero rate, it means I bought something, I was charged VAT on it. But when I sell this VAT, when I repurpose and I sell this item, whatever it is, to the next person, I will charge VAT at a rate of 0. So the advantage will be to the person who's zero rated, because this will mean I can claim the input VAT and I will not charge any output VAT. And you'll find that most of the times when we put where we have zero rating is where we want to encourage more traders and more investors in a particular sector. We'll also tackle that well when we'll be doing VAT. I hope that that sort of clarifies the question that has just been asked. So on the issue of consulting and who's supposed to be a consultant, that one will definitely handle it when we'll be having our next session. I will come with the definition from the Act so that we'll be able to just appreciate that. So on final dues, what is taxable and what is not? Again, this comes to gratuity, lump sum. This is usually dependent on, one, how long has that employee worked? Some will be treated differently. So I've requested on the issue of gratuity, because all these fall under pay as you earn. We'll have a session on pay as you earn. We will capture gratuity. We will capture lump sum. We will capture even those exemptions that you want us to talk about, and we'll also capture issues to do with consultancy versus employee. So we'll have the definitions so that we'll be able to just appreciate where KRA is coming from. So so exemption from interest restriction. So there's something we call thin capitalization, and thin capitalization is where the debt, if you look at debt to asset ratio, you find that the debt ratio is higher. So for this particular, their entities that actually find themselves in this particular situation. So we initially we used to restrict them from claiming that interest. But currently with the Finance Act 2022, we've exempt those interest restriction, and we're allowing them to claim that as well, just so that we may be able to support the players in those particular sectors that I had mentioned earlier. So let me see if there's any question.
Yes. Several questions, but I don't think you managed to finish now because we are past time, almost half past, and I know the others joining other meetings. So you can have the last three, then maybe we request members to share their questions. You can leave your contacts for them to contact you directly. So I request that if you can go through the last three questions, and then we close at 12:30. It's my kind request. Thank you.
Okay, thank you. So I'll just answer three questions. One is, please advise on NITA payments through KRA Unified Payroll. Was it changed to monthly or from annual payments? What the system has done is just given you a provision to use both. From KRA, as we're just an agent who is helping NITA to collect the levy. So you'll find that the system will give you both options. You can, if you want, you can do it annually. If you want, you can do it monthly. But whether or not it was changed, NITA will be better placed to be able to address that particular issue. So let me see. So there's a question here on mortgage relief. How do I calculate it for my staff, and should there be any documentation from KRA? So what happens to, ideally what the staff should give you, it should give you a mortgage certificate. And when the staff gives you a mortgage certificate from we have a list of financial institutions that offer the mortgage facilities. So they'll bring you the mortgage certificate. Once they give you the mortgage certificate, what you're supposed to do is to be able to give them the relief. And the relief is up to a max on the interest that they pay. Any interest that they pay towards servicing that mortgage is exempt from tax. So, but of course, is up to a maximum of 25,000 per month. So that is all you need to give them. So you will when filing the pay return, there's an option where they will ask you, is there a mortgage? It will pick the interest that was paid, and also you will put as the employer. And then when they will be filing their return at the end of the year, what we'll require from them is for them to sort of fill in now the missing gaps. How much did they borrow and everything, so that we can reconcile. So from KRA, we will not give you anything when it comes to giving the mortgage relief. All you need is between you and the employee. The employee should give you the mortgage certificate for you to effect the same. And for her or him, should make sure that when they're filing their end of year return, they also include the same. So with that, I think I'd like to just end the questions. I'll kindly request if we will pick some of the questions that we're getting from the floor. I hope Milka will be able to share them. And then we'll just do an FAQ around them to answer those questions that we have. So thank you so much for your time. I'd like to hand it back to Milka.
Thank you so much, Corazon, for the presentation. And before I forget, getting request if you are able to share your contact. Is that possible? Is it okay with you? For further consultation? Can you hear me, Corazon?
Oh, sorry, Milka, I was muted. Yes, that is fine.
Oh, you were muted.
Yes,
yeah,
I had muted.
I was wondering. So the request from members, if you can provide your direct contact or a contact they can reach you on for further consultation, because there are several questions still coming in that you might not be able to handle all. So is it okay? You share?
Yes,
you can post?
it's fine. I will. Oh, you want me to post on the chat or on the queue? I can post on the chat.
On the chat.
I can also. Yes. Okay.
That's okay. Yeah, if it's okay with you, no problem.
Okay.
And you will also share the presentation for the team.
Okay, no problem.
Thank you. Thank you so much for that confirmation. To our members, we'd like to thank you for attending the webinar on Finance Act 2022. We believe that you've learned, and we look forward to seeing you at the next webinar that we're planning to have on 2nd November 2022. We truly appreciate your support. Actually, we still have 3 more trainings in partnership with KRA. We have November. In November, we'll have something. February 2023, we'll have something. And also in April. So we still have a lot for you. So stay tuned for the advert and we welcome you. So thank you so much, KRA team, also for this. We really appreciate, we don't take it for granted. So from the Institute, asanteni sana, see you next time. Thank you and have a lovely afternoon and vote wisely. Thank you. Thank you, Corazon and the team.
Thank you so much, Milka. Have a lovely day ahead.
Lovely afternoon.
Thank you.